What's going on, everybody? Hope you're doing well. After 4 weeks of selling, the buyers have finally stopped the bleed, but the battle's still on for the July 2024 high. So, are sellers out of bullets, or will they punch it through after a little bit of a short covering rally? That's pretty much the scenario that we're looking at right now. My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and the swing report. In this video, we'll answer those questions and more. So let's get into it here. Okay, so starting off with SPY, the overall market. I started off this session, the Friday, it's Saturday now. So yesterday's session, there's no Saturday session. I'm thinking things are not looking good for these buyers because what had happened in the throughout the week was that, all right, well, you have this pretty decent start Monday. Don't get to the point of control of this gateway structure, right? This gateway structure, which is the gateway into all of this overhead supply hanging out over the July 2024 high. You fail to get to the point of control. You don't get to the daily no change. And then you see some weakness, right? And this was actually a very notable defense, right? Because buyers had a lot of space to set a higher low. So the next day, break into a higher high after holding the point of control of this guy, which is the gateway into all of this, right? So right now, primarily what we care about is the July 2024 high. And on either side of that July 2024 high are these two balance areas, the two gateways into the structure above and the structure below. So that's what we cared about primarily. So that was notable. This is a very notable defense, but then this higher high lacking follow through makes you think again, oh, okay, that's the buyers still not attracting new buyers when they're pushing to higher prices. It's a bit of a red flag again, right? And then you have another session, which is an inside bar and another failure to get to any kind of key level for change. And then you had a gap down. So I was thinking, that should be the go sign, right? After multiple failures to get to the daily no change level and the point of control of the key supply, to then gap down, these sellers should have looked to really punch it. Now, I was live streaming on Friday, and so I wasn't too active in futures trade, but I did say in the morning why I was not too interested. Sorry, I was not too interested in going with the sellers on this gap down. Typically, the gap guideline is if you have an incomplete gap fill and then move back down under the open, that should be the go sign for these sellers. I was not terribly interested in that because just of the overall context, right? We were set to open up, gap down, open to the lows at support and roughly at the highs of this local daily demand. So it just wasn't the most ideal context for a gap up play, right? The best gap up plays are when you are breaking to a new high, right? Incomplete fill, move back over the open, great. That's an easy buy. Gap up open, no fill whatsoever, right? So there's no corrective activity off of a gap. That's pretty much the best case scenario. That's great, right? And why is this good context? Because again, there's no overhead supply here, right? It's smooth sailing. So when the context is balanced and the market has been choppy, and we've already had a lot of selling, that gap down is far less attractive, right? So I was not too keen on joining the sellers and off the open at least. And the strength into the end of the session, I think is notable, right? Like I was saying in the beginning, it kind of feels like the sellers are just kind of running out of steam here, right? Like you probably had just too many people, markets overly short, lower lows lacking follow through. Again, that should have been the go sign. And not only did they not press the issue here, but the low of the day was pretty much right off the value area low of the this guy, right? The 819 to 830 structure, which is the gateway into all of this structure below. Very notable defense. So what are we looking out for, right? There is the potential that we're looking out for now. Well, we should be looking out for the potential of a short covering rally, right? If these sellers are running out of steam here and these buyers continue to press the issue, then you have a lot of people who are sellers in here, right? And so they are going to likely be forced to close their position if we continue to see higher highs. So next week, what we need to continue to assess is really the same that we've been watching for the last 2 weeks or so. It's 560.79 as our key downside reference. The buyers really want to defend this area as demand in order to stay positioned well for a go at the July 2024 high. Of course, we care about the July 2024 high, but I care more about 571.35, the point of control of the supply that's the gateway into all of this. Finding acceptance over 571.35 would mean that we should expect price action more similar to this. Now, that being said, there is a lot of space for a potential weekly lower high to be set, right? Anything under 613.23 will be good for one. And so really, there's a lot of space for that. And this is a good amount of supply. I would not be surprised with an initial weekly lower high. And then what that, assuming that we do get that bounce for a little bit, more space to create a space for a higher low, what that retracement for a higher low looks like will be very key. Okay, so that's pretty much it. That's pretty much it for the SPY. And then moving on here to the Qs. So for the Qs here, it's a pretty similar situation. Obviously, they're much further off from the July 2024 high than the SPY buyers are, the ES buyers are. And I'm primarily watching this fella because this guy is what dictated the lows of this current structure that the sellers just traded through. So it's a very similar situation, right? Where you're just kind of trading sideways here, but you do have a little bit of local daily demand here. Same thing with the SPY. You have a little bit of local daily demand, these 4 days of balance or so. Buyers holding over the back test of these 4 days of balance or so is very notable. There hasn't been a case where the buyers have defended an area of demand since all the way back here, right? This little breakout, hold over all of this demand, and then obviously we rolled over from there. So it's been a long time since these buyers have been able to establish any kind of demand and then breakout. So if these buyers can continue to hold over backtests of these local tiny little 4-day balances or whatever, technically we're constructive on the daily time frame. Now again, on the weekly time frame for the ETHUSD, lots of space for a lower high under the record high, 540.81. And honestly, that's really all that I care about primarily. If we do happen to get over the daily no change level, which is at 487.74, that's really what I care about the most right now, because this breakdown is not yet negated until we can negate the breakdown under this key support, 487.74. Once we're over that, then it's right back to looking up at the July 2024 high. This is gone because of the webinar. I have to redraw that later. I'm not too keen on like any buys right now. I do think that there's a pretty decent shot that these buyers are going to press the issue next week. I do think also that it's very reasonable to be looking for sells over here, but I just kind of want to see what this is going to look like. There's been a lot of negative headlines in the market right now, right? And so that I would not be surprised if there are a lot of people who are just very, very short right now, right? And if there's a lot of folks that are short, but the market's not moving lower, then the potential for us to see like short covering rallies can be very swift, right? They can be very violent. So I'm not too keen yet on being super early on a sell against it, but I do think the location against the July 2024 high and this gateway structure makes a lot of sense. But I'm just going to take it one day at a time for now. I've just been focusing more on the day time frame stuff as the market has just been a little bit shakier, unclear. I think we're pretty much done with earnings, so I think the potential for things to smooth out a bit is good, but we shall see. That's pretty much it for the Qs. Okay, so 487.74 next week is going to be key. 503.51, 505.17 as upside references, and of course for our downside references, we really primarily just care about local daily price action support. 466.43. I'm still watching this volume down here. If you zoom out, there's a lot more volume traded here. 438.49 is the point of control of this guy. So essentially, we're trying to resolve this structure right now. As long as we're finding acceptance under the July 2024 high, the sellers should be trying to move down to here, right? Roughly the lows of all of this guy. And so there's a lot more volume traded there. I would not be surprised if we were to get some kind of short covering rally, and then if we were to reject from all of this supply over here, I would not be surprised if we look to test this guy. You know what? I honestly think it's fine, right? We'll set it up like this, right? It's reasonable to be looking for a sell like this. I ideally would look for that in like at least hourly overbought conditions. Something like this, I think, makes a lot of sense right now. If these buyers were to just rip through this area, that would be some very, very notable strength. I do think that if we were to see lower lows, we should try to get down here, but this sell should be something like this first, right? Just looking for us to try to stay within this balance, because the buyers defended this July 2024 high many times, right? Over here, it would make sense for these sellers to respond in kind, try to defend against these same levels, because all of this is now daily overhead supply. Okay. I would prefer to do it on the Qs, I guess, over the SPY. The SPY is, there's not as much space for these buyers to work with. They're like flirting with this break back over the key level. Okay. Moving on to the rut here. So the rut still hands off for me. You know, it is noticeable. I've been talking about it in our room that the rut has been showing us some relative strength, and that, you know, like if the overall market is weak, the ES, and the rut is strong, that doesn't really make a lot of sense, right? Like because the rut are the small caps, you know, and they're the risk on assets essentially, like, you know, crypto or whatever. And so the fact that they were showing us some relative strength was, in my opinion, a clue that these sellers were kind of running out of bullets, right? So I think that's very notable, and they still continue to have, or they were continuing to have some relative strength here because they have the most clear breakout over this local daily demand. And they've already negated the change of the breakdown under this March 4th low, right? For the SPY, the QQQ, here's the March 4th low over here, and they've yet to test it. QQQ, same dealio, they haven't tested it yet. But for the rut, they found a decent amount of acceptance above it already. So I think that's pretty notable. And as of right now, trying to set a daily higher low here over 197 at 201.76, and of course we just need acceptance over 204.42 next week to confirm that higher low being set there. I think this was also a very notable failure to not move down to the point of control of this structure that it just held price, this guy over here, which led to this big rip up. Now that being said, the buyers did reject from this key structure from 2021. That's this guy. This guy over here that made all these lows over here, made all these highs over here, made all these highs over here as well. Timbo gave me this good clue or tip or note to use the cursor finder instead of waving my cursor around. So shout out to Timber. Anyway, that's really a very notable rejection, right? So as long as we're finding acceptance under this guy, which is the case right now, we should expect price action like this. But this was a lot of selling to come into it. So, you know, again, there is a decent shot here for these buyers to hold over the daily no change level and negate that change, which they've already done really, and I'll find acceptance over 207.57. So I'm thinking upside references next week that are key, absolutely key, 207.57. The value area low of this guy, right, at 211.48, and then its point of control at 217.60. These are the key upside references to be looking out for next week. And then for downside references, if there is continuing to be weakness next week, then we care about 201.23, and then I'm watching 196.70. That's just this major support, right? This major support which led to higher highs. We should pay more attention to that than, you know, a support that doesn't lead to higher highs. All right, so that's pretty much it for the rut. It's still, I'm not really doing anything with the rut beyond the day time frame. I've already built that position over the last year. It's, you know, it's gone for the old elevator, rather stairs up, elevator down situation, but it's what it is. I'm just gonna hold on to that because I don't know. It's already paid for through trading. So I honestly haven't even been selling credit around it. I'm just like, I don't even care about it anymore. I don't know. I think that's a really fine way, I think, to approach, like, if you're trying to build a position with shares with like futures contracts, then, you know, it's not that you shouldn't care about it, but I don't know. For me, knowing that there's no risk in that trade, I'm just letting it ride. It probably is a pretty good credit selling situation, but I don't know. I only have so much in a day, right? Anyways, that's pretty much it for IWM. And again, if we're looking for that sell up here, I would not be surprised if the sellers defend this area. I forget where it was up here. I would still be very interested in a sell up here, especially if these buyers rip all the way up in one go. Okay. Moving on to the Dow here. Okay, so the Dow made it through this high volume area. Not the best look. However, this is kind of the gateway into all of this demand over here. So lack of acceptance into here means we don't come into all of this more or less sideways. Like I guess if I were being really rigid, I would consider this an area here. I would consider this a breakout over here that failed. And then I would consider this like a separate structure. But still, this is what must be traded through in order to come back to this much higher area of value. And so if we don't trade through this structure, then obviously we don't come down here. That's obviously the best deal, the best look for these buyers. And as of right now, trying to set a daily higher low here at 414.19, need over 420.01 next week to set it. And really, I care primarily about 421.08. 421.08 is the point of control of this guy over here. And you can see how relevant this structure came over here and then again throughout all of this. And right now it's acting as resistance. So if these buyers next week can find acceptance back over 421.08, that'll, you know, they'll breathe a little sigh of relief here, because then we should expect price action like this again, like all of this. That's really it for the Dow. Again, this is like a wait and see for me as well, right? Like if we're going to be buyers here again, playing off of this guy, need to see some follow through first and then look for a higher low play here, and then we can play to try to get here. I would not be surprised if sellers take a stand over here again. All right. I like this trade a lot for the dollar, this trade zone, I should say. It makes a lot of sense, you know, because here's our original trade zone. It's just a responsive trade looking for further balance, knowing that this is a key structure over here. Knowing that this is a key structure over here. It's contained all of this balance since 2022. And so there's a lot of space for a lower high right now to be set under 107.595. That would be for a potential weekly lower high. Makes a lot of sense, I think. It's pretty much the exact same trade as this guy, just the other way, right? Opposite. And so I would not touch this trade zone at all. I think it makes a ton of sense doing it just like this, looking to play to the other side. Responsive trade 101. You know, it's one of the most straightforward trades. It's an example of a semi. I think the semis in general are doing that. I think just trading sideways like forever, right? So the value trades are here, lots of opportunity here, 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 and as buyers here and here. I think MU's doing that as well, right? You just bang-a-ranging around, right? So whenever you see a lot of balance like this, you just want to find what the key structures are, and then your trades are going to be structured around those areas, right? And if you know, are it can be easiest to use options, honestly, right? Because then you don't even care if there's like any, like, you can set your risk basically with the cost of the debits laid out, and then, you know, just play to the other side. I think that's one of the most straightforward ways of playing balance if you're not like keen on, you know, taking session to session setups or whatever. If you're just like a pure swing trader and you don't like having to use hard stops with shares, options are a really good bet. The timing just becomes an issue, right? So you want to give yourself, it's typically better to this is kind of getting outside the scope of the video, but it's typically better to just pay for more time premium. Time premium is cheap, so don't choke yourself out of the trade with not enough time. Choking yourself out with options out of the trade, you know, using time when you're using options is very similar to having tight stops with shares. You know, you want right stops, not tight stops, right? So, anyway, that's pretty much all I have to say about that. What the heck are we talking about? The dollar? All right, that's pretty much it for the dollar. Really, nothing else to say there. NVDA, so really just hanging out, doing this sideways mix-up right now. And I'm still not opposed to it coming down here. Again, I'm being very picky with NVDA. My average is in the single digits, so I don't, it's like $1 and change. So I'm not really terribly interested in reinitiating anything. You know, I'm happy to just keep selling credit around it. Very fortunate. Just this is practically luck. You know, I wouldn't even consider that position much of a trade. It's just that I like games. So so you know, what is it? Patrick O'Neill, I think. I think it's O'Neill. I always forget. William O'Neill. In that book, you know, How to Make Money in Stocks or whatever, he advocates for doing fundamental research just based on the stuff that you know. So for me, I was a gamer. I was into crypto, and people were using their GPUs to mine. And again, I like games. So, and I've always been an NVDA buyer until recently, because you just can't find their GPUs anywhere. They're not making them for you know, consumers anymore, because there's much more money to be made in data centers, right? Anyway, my point was just it was more luck than anything, but because that is a very sizable position that's done very well, I'm not really in a rush to do anything for NVDA. So I'm not being aggressive, which is why this might seem very conservative to a lot of people, but I really don't think so, because NVDA can easily retrace 40%, does it all the time. Did it right here, right? 40% over here. This is probably like, I forget, like 20% here. And then this was 2022, of course, but this is 70% decline. You know, in one of the, arguably the best AI play, right? At least from a hardware perspective, that's not even much of an argument. So that's me. You know, if you want to be a little bit more aggressive, I think pass back over plays, pass back over 114.71. I think that's reasonable. Just like for example here, those are a little bit trickier, of course. Demands a little bit more activity, but you know, I think that's reasonable. But if you're just a pure swing trader, you want value out of your trades, I still think here is where it's at, right? This is that key structure. It looks very, very similar to Microsoft. Microsoft has been trading sideways for a long time, holding over this key structure. Looking like Apple is starting to do a very similar thing, trading sideways here. So I just wouldn't be surprised if we're looking at something like this, right, for NVDA. That's just what the market has to do, right? The market has to balance and trend. And right now we are balancing. And so if we're going to continue to balance within this very large range, the seller should be trying to come down here, you know? So we shall see. Maybe I'm wrong. I'm of course open to being wrong. I'm wrong all the time, especially if you talk to my wife, then of course I'm wrong more often than not. That's actually a saying that we have in my house. My wife's always right. I'm always first. I tend to do things first, and then she can review that and then tell me how I was wrong, and then do it right. Anyways, sometimes she's right beforehand. Like, you know, don't want to misrepresent the situation here. Anyway, it's not like she never takes initiative. This is a big tangent. Anyway, so that's pretty much it for Bitcoin here. We're still watching the same thing, right? The sell over here that we set up weeks ago or whatever. You're still seeing pretty here, right? It's not ideal because the sellers, you know, got caught up right here, haven't made it back down to 73835.57 to negate this breakout, this super major breakout over this very large area of demand. But you don't really have to do anything with this, right? If you've taken your profit, your stop is over here, you're still looking to get there. You know, another partial out there is very reasonable, and at that point I would just look to walk the stop down. And this is still technically constructive for sellers, right? You have this supply over here, right? All of this supply over here, you break down below it, and as of right now it is still acting as supply, and another rejection over here from the value area low of this key structure, which was supportive of price throughout all this balance. You can see how the initial lower high on a lower time frame, like the 4-hour time frame or so, right off of that value area low. I'm sure that if we were to zoom in, there's probably more like of a battle for it, I would imagine. There's that key rejection. Here's a battle for it as support. Here's another perfect lower high off of it. Here's another perfect higher low off of it. Here's another perfect higher low off of it. It's just very clear when the market is has found an area to be significant, and this certainly is. So that's pretty much it. If you're a buyer, you're pretty much waiting for something like this, right? You're want to see something like this, look for a backtest play to the other side of the range, or you're looking for something like this, right? Lack of acceptance down into here, pop back over it, great higher low play, look for it to try to play to here. Okay, it's reasonable to be a buyer here, you know, like it's not like something like this. I know that's a large range, but it's rough right now. Something like this makes a lot of sense. Trying to play it here. Okay. Moving on to Ethereum. So Ethereum, do we have things that are broken on trade zone here? And it's honestly not ideal, right? So Ethereum is not looking so hot as long as we're holding under this guy, right? This guy is what supported price throughout all of this very large balance here. So if you're a buyer, you're probably waiting for price to move back over 2045.61 before looking for a higher low play, something like this. Did we always cover Ethereum? I feel like I don't really talk about Ethereum much. Anyway, something like this I think would make a lot of sense. Basically, this would be a look below and fail scenario. And then if it's going to be a look below and fail scenario, then these buyers should try to get to the other side of the range. Okay. That's really it. This local daily demand is very notable. So technically this daily chart is constructive as long as these buyers are holding over backtests at the highs of this local daily demand over here, which is the case right now. So buyers playing some defense, but they haven't really even made it back over the key level yet, right? Which is 2045.61. So for me, Ethereum, wait and see. I'm not terribly interested in a sell off of this yet because it just wasn't that much follow through, you know, under the key 2045.61. So I would prefer to see more follow through and then be more confident and looking for a sell here. That's just me. All right, last but not least, is it last? Yes, URA. So for URA here, I wouldn't adjust this, right? For the last few weeks, we've been talking about it. No adjustment to this trade zone. They should be trying to play it here. This is bigger picture balance. So again, whenever you're dealing with bigger picture balance, you want to just look for the key structures that are making the highs. So I'm looking at this guy, which is clearly making the highs or affirmed over here, and over here, right? And then what's making the lows? It's the structure over here sitting on top of all this demand, which has made this low, which has made this low, and is now making this low, which is obviously why we set up the trade zone here. So at this point now, this is enough balance where I think taking partials out is reasonable. Pull your bids lower, walk your stop up to over here, and you know, see what the market will give you. This is already a decent move here. All right, so that's pretty much it. I got a decent amount of review stuff. I think you know, starting off with something that's like not trade specific, just, you know, thinking about what like stood out to me the most from the last week of trade was a concept. Hold on a second, I have it pulled up over here. There we go. It's essentially this, right? Like you know what? I should just probably go to. A second here. Where'd it go? Let's see here. So this is just our futures chat room. Okay, so in pretty early on in the session, got a question regarding from Madam Stamos. Oh, from Madam Stamos over. There we go. Yeah, so Madam Stamos says, okay, is today a second day affirmation play for the ES sell? And that's on Thursday. And so what he's talking about is, what he's asking about is, on Thursday over here, he was asking, okay, well, because the buyers failed to get to this key level here, should we be open to sells on Thursday now, right? And my response to him was, yeah, I think it's reasonable, right? I just don't love the fact that we're in the 3-day range. So ideally, we'll see a move to test the supply at the high of yesterday. And that's over here, right? So here's Thursday. Here's Thursday trade, week open. All right, so I'm saying, all right, if we're going to hit a sell, you probably want to look for a sell against this structure, right? And let's see, I say the white pot beta is reasonable as well, but leave enough risk capital for the potential top fish against the aforementioned supply. Oh, that's weird. There should be one more comment here. Hang on a second. The last comment that I said was, oh, that's later in the session. So it's over here. Let's see. What time is that? Hang on a second. Sellers likely interested to break back below supply at high of day. Hang on a second here. Apologies. Here, I'll just move this over, I guess. This comment is oh, I know I've lost it over here. Okay, over here. Sellers are likely interested if break back below supply at high a day. Ideally, some dead cat bounces off of the lows of the supply for a low risk setup, right? So the idea is, all right, we want to be a seller. If you're going to be a seller on this day, you're either going to be here. This is the most aggressive seller, right? Where you're looking for a potential failure at yesterday's point of control. But the sellers are still okay, constructive relative to this session if they can hold under the supply at the high of that session, right? So you have to be open to that as well. So I was thinking, okay, well, if that's going to occur, if these sellers are going to press the issue, then they probably want to see a move back down under that key supply. And then, hang on a second here, where's that comment? The timing of it exactly. And then see that dead cat bounce. I don't want to keep wasting time looking for it. They changed how Slack works, so it's like much harder to find these things. And so you do actually get that setup later, right? Where you get a dead cat bounce over here off of this supply, right, to make for a lower high over here. So if we zoom into the lower time frame charts, it looks like this. So here's that session, right? Here's the low of that supply. This is the supply that we care about, right? Because as long as we're sellers can hold under this guy, then they're constructive again. And you can see how you have dead cat bounces here, here, and here that were very reasonable setups off of that supply. It was even better on the NQ. On the NQ, we were over here. Here's that end of the day supply, and here's here's the end of supply over here. It's probably hard to follow, right? Right. This is what we care about. That's this. That is this guy over here. So this dash yellow line is the same dash yellow line. And then you'll see that we break back below it over here. And you get a really nice dead cat bounce over here. right? Nice dead cat bounce, nice dead cat bounce. Exactly what I was talking about. Looking for a little bit of dead cat bounce under that supply. So what is the point? The point is that if you are looking for a trade, right, you want to think through the entire trade, right? Where are all the areas, where all the locations that would make sense? And once you know all the different locations that would make sense, now you can decide how to split up your risk capital, right? If you know that there are at least 3 places that you're willing to take that trade, you know you have to give yourself at least 3 shots, at least, right? So you don't want to fire off all of your risk capital at the first attempt. So the idea is, think through the entire trade, right? Before you even do a thing, think through the entire thing, and then you won't be caught off guard. You'll be more prepared, right? Your brain is like, it's more readily available to execute, right? If it has already laid out some of the potentials. Like, when your brain has a hard time dealing with a lot of choices. There's like this experiment or whatever where they were like giving out free ice cream. And if you are giving out some free ice cream and you offer just 3 flavors, then you'll be out of ice cream in no time. People are gonna want to, okay, let me try that, and then they're gone. But if you present them with 100 different flavors, you'll be there for a really long time, because people become overwhelmed and they just decide, I don't even want ice cream because this is just too complicated. And so the brain has a hard time, dealing with a really, really large sample size. And when you're trading, there's literally, you can do anything, right? And so you really want to narrow down your focus. And how you can do that is by thinking through the entire trade, right? So yeah, I just want to make that point. I think it's a very important point. It comes up fairly often. And again, I just think it's very helpful. Excuse me. Okay, now in terms of trade review, last week was really all about daily references. Like, playing the day time frame setups using the daily references were just absolute bangers. I don't even know if I want to go over all of them, because there's a lot, and I don't want to run this too long, but it started off on March 18th, and I have all of the time-stamped posts over here. If you want, you can like review them, pause them. I don't know if I'm going to keep going back and forth, but the idea was this, right? So for the ES on the 18th, the 18th is the Tuesday. I very often am busy on Mondays, especially right now. My Korean mom is not doing so well. Again, and so yeah, so very often I don't take much trade on Monday. Very often I don't take much trade on Friday, because I do the morning stream. That takes up a lot of my creative juice or whatever. But on the 18th, you can see I hit the sell right off of the open on 9:30. Why? At 9:30. Why? Because it was a pass back under the July 2024 high, which also aligned with the YPOC failure. Okay, so if we go to this day on the 18th, you'll see that that's this day. Here's the 18th, right? So we open right under the point of control of the prior session, and the point of control of that prior session is also under the July 2024 high. So if we're not going to move over the point of control of yesterday, what does that mean? That means that the sellers are positioned well to move value lower from session to session. Essentially, the sellers are defending exactly where they have to, right? Additionally, on the daily time frame, we have this obvious key level 565.16, which they failed to hit. So if you're going to move higher, and you're not going to get to that next key reference, and you're not going to be able to take out the next key daytime frame reference, what should we do here, right? We should sell, of course, right? For daytime frame traders, at least. And excuse me, what I was looking to play to was the 560.79, the ESL to 560.79 on the SPY. And the SPY is over here, right? And this is 560.79. So you can see how we actually broke beyond that level for a little bit. But if you zoom in to that day, here it is. Here's that sell-off of the open, off of yesterday's point of control, off the July 2024 high. Here's 560.79. We literally spend the entire day there, right? So yes, there's a little bit more follow through here. We could have got maybe like another 20 points, which is, that's a grand per ES contract. So that's like not nothing to sneeze at. But you also have to sit through a punch of chop. And what makes anybody think that they're going to get that perfect exit at the low of the day? You know what I mean? So, for me, the key lesson here was not necessarily the trade itself. I mean, there is good lessons to be learned. The confluence of the session to session setup the day time frame reference confluence with the daily reference, right? So you're aligning yourself with both session to session operators and the day plus operators, right? So, the market is always composed of every single type of operator, right? And when they're all aligned is when you get the best moves, right? When day plus operators are aligned with the day time frame operators, that's when you obviously get the best moves. So, and obviously there's like weekly operators, monthly operators, whatever. When everybody's aligned, that's when you get the best move. So the key lessons then for this trade are: look for the confluence of the day time frame and the daily and the day plus time frame. Use the day time frame references to get a more asymmetrical setup to join higher time frame operators and to not care about maximizing the trade, right? It's good to exit these trades, especially when you're going against the trend. Technically, in this situation, we were going against the trend because value had been moving higher for 2 sessions in a row, right? And there was space for a higher low. So we don't want to just assume that the seller is going to punch it through. You know what I'm saying? So anyway, that's the idea. So the last idea, I guess, would be to don't worry about the ends, right? Like just you really care about that meet in the middle, especially if your location, which was this time again, this sell is exactly at 9:30 a.m. You did get in really good on one side. So when your entry is really great, your location is really great, you don't have to worry so much about your exit, because your R is already sick, right? Like even if you were really late on this, right? You came up not at 9:30, but you're like there at 9:31. Maybe you sell the like the new 1 minute low or something, right? So you sell it over here, you're really, really late. Even if that's the case, you're still looking at like a 2.7 R trade, So don't worry about the ends. Just worry about the meat in the middle, and you'll save yourself a lot of stress. And you really want to minimize stress when it comes to trading, because more stress means more emotional turmoil. More emotional turmoil means trading mistakes. Trading mistakes means stress. You can see this negative feedback loop, right? I always say that it's really good to prioritize ease. I'm just laughing because there's this GIF. I love this, or GIF, whatever you want to call it. I love this guy. We're just having fun in the futures room. Anyway, saw it out of the corner of my eye. Anyway, so that was Tuesday's trade. I'm going to try to get through these really quickly because I don't want to. Oh, there was also a pairs trade on Tuesday where I was a seller in the ES and I was a buyer in the RUT because there was relative strength there. So at 9:46, I buy the RTY, pass back over the developing value area low. And that again was the 18th, right? Yes, the 18th. And so on the 18th, we're over here, and this is the pass back over the deval. Hang on a second here. Oh, this is hang on, it's got I had ETH on for some reason. That's where I never have it on. 9:46 over here. So we see this new low of the day, and what's happening is, again, I'm playing off these daily time frame references. What happened at the low of the day on the 18th was a hold of this key value area high that we're using as our reference, right? And so again, you have confluence of a day time frame level, which is the developing value area low, right, of the session, with this key daily value area low, and the RUT was showing a lot of relative strength, right? The ES and the NQ on this day over here made a lot of ground past the regular trading hours low of the prior session, whereas the RUT barely broke it. So I was seeing this relative strength. Again, I've been talking about the relative strength for a while in the RUT as a potential indicator of strength in the market, right? Because it's a risk-on asset. It makes no sense that it should be stronger than the overall market. Of course, that could be a fake out, but in general, when the RUT is doing well, that suggests that there's, again, risk-on appetite, right? Anyway, so I bought that move, and then let's see here. Stop looking for a diva for a chop. I chopped at a diva, and then I just stopped the rest out, right? Because the entire session, I don't regret that at all, because the entire session was just balanced, right? So chop it. I'm sorry, buy the pass back over this one, chop it at the diva, stop it on later in the session, no biggie. So a little bit of just some tacos or whatever. I don't really know if we need to go. Honestly, these other trades, they're pretty much the same. Like it's the same concept, right? Again, I bought the ES right at 9:30 again. And if you're interested in trading along like this, learning this, even if you don't have to trade futures, right? If you just want to learn this system, it's totally applicable to stocks as well. If you want to learn this approach, give the chat room a shot. We hang out in here every single day. we do a lot of good work. We also have a lot of fun. You know, it's a pretty supportive group of fellows. It's almost like a support group in general, right? Like if you're down and out, you know, for whatever reason, personal reasons or whatever, everyone's real friendly. And if it's obviously if it's trading related, everybody, you know, has their chips in their 2 cents and whatnot. But anyway, I bought this pass back over the open after missing the back test of yesterday's demand. So again, I'm sorry, the original one is a stop, but we do it again over here. It takes me 3 times, I think, this time. But the idea is the same, right? We're playing off of this daily value area high on this day, right? And again, there's this confluence, right? Because on the 19th here, when you're at the low, on the 19th here, when you're at the low, this new low of the day, so I buy this initial move over the open, stop it out, but I take another shot here. Why? Because it's the value area high of the prior day, right? So here's the prior days, and here's the just testing the value area high. Value is still moving higher session to session as long as we're holding over the value area high of yesterday. So despite these buyers not building, you know, not going right off of the jump here, I know that these buyers are still in it if they can hold over yesterday's value area high, right? So let's see where we at. Buy the pass back over the diva for the ES, looking for the diva for a chop, and then a chop of the diva. So that's just over here like this. The 19th is over here, right? Move down, buy this, chop it up, stops under here. I forget where we chopped it next. Okay, one more time off the value area high, that's over here. Looking for the deval chop. Okay, so I played it over here, chop it at the deval, out more at the open, and then at 10:04 I exited the rest at 10 because that was already beyond where I wanted to play. At 10:04 we're over here, at this move, and so at 10:04 we're looking at it like this. On the 19th, I really was just looking to play to here, right? No, I'm sorry, I wanted to play to here, the value area high of this session. Why? Because this session was affirmed, right? The buyers of this session were affirmed on this day. And then you break back to below the point of control on this session. So I'm thinking this guy is our key, right? I'm thinking, okay, well, if these buyers are going to have problems anywhere, it's probably going to be here. And they moved beyond that. And then they came to the point of control of this guy, which is exactly where the sellers rejected from the prior day. That was the sell that I hit that day. So I just closed it out, and that was fine with me. That was enough for me on the session. And then there was some balance and an end of day rip, and I don't mind missing any of that because these were much more challenging setups, in my opinion, than the original buy off the open, off of the key structure. So that was pretty much it. And then finally for the rut, I guess we can run through it. Why not? For the rut, the last one here, not a big deal, not a big trade or anything, but again, it's a very, very similar situation, right? Where by the new RT high, I wasn't terribly confident, but I was playing off of the value area low of the 1-6-11 structure, right? So that's this guy over here. I only did 2 because I wasn't very confident, and I figured I can maybe add to it if it gets going, but I didn't. So on Thursday, we're over here. This is the value area low. Again, this is a buy pretty much right off of the open. This is 931. I just bought the new high. So if you zoom in, looks like this. Over here, I just bought this new high, right? You get this initial move lower, no follow through, buy that new high. This is like nothing on the stop. Chop it up at the diva, chopped it up one more time when we were getting to here, right? Because this is the supply at the end of the day, right? Over here. I just chopped it up over here, right? And just because I just didn't have a lot of confidence in the move seeing more. And although we did get a big push into it, ultimately the sellers did push back down under it. So I don't really regret that too much. That was already fine. Again, I wasn't really too confident in that move, just based off of the overall context of all of this balance here and the very clear rejection from the point of control yesterday. So I felt like I was kind of going the wrong way a little bit, which is technically correct because we did move lower here on Friday. But you know, it is what it is, right? This is just a situation where, and I think this is a pretty good like point to make as well. You know, your sizing, your aggression should be based off of your conviction, right? Like if you have a lot of conviction, then you should, you know, can really leverage into it. But if you don't, you know, keep those sizes small, right? So you don't take so much damage for. There's no reason, I think, in my opinion, if the context to the edge, because the edge is the same, But if the context of the edge is not ideal, just like why I wasn't keen on being a seller on the gap down on Friday yesterday, it's the same idea, right? It's you know, that trading an edge without consideration of its context, you know, it doesn't make a lot of sense. That's like throwing a punch without knowing where your opponent is, or how tired they are, or how prone they are to that strike, right? Like if they have a really high guard and it's like a really tight high guard, you know, your straight shots are probably not going to get through, right? So you probably want to feint, make them open up the guard. That's the better context for you to throw your straight shots, or just start throwing some round shots, right, around the guard. But anyway, that's really it. I really try to keep this shorter, but here we are again at 45 minutes. Anyway, if you made it this far, I appreciate you tuning in. Thanks for sharing some of your time and energy with me. If you're interested in the chat room, like I said, grinding away with us in the futures room, you know, hanging out with us day in and day out, check out the chat room. Links in the description below. If you're interested in the swing report, which is 2 novel ideas sent to your inbox every single week, an update from myself regarding any live ideas, an update from Dano regarding the overall market, any of his trade ideas, and live updates, as live as they can be at least, for any trades that I do take, sent to your inbox, not necessarily to copy, but to reverse engineer all these trades to show you the process of how it can be done. Then again, links in the description below. We're doing a sale right now. I think it's half off. I should know. I'm pretty sure it's half off. It's half off for the first month, so it's $35, or it's $1 a day or so. You know, most folks probably spend more on coffee. I do. So anyway, that's pretty much it. Again, appreciate y'all tuning in. If you could hit us with a like and subscribe, we would appreciate that very much. Lets us know to keep making content like this. And that's all for me. So I hope to see y'all next time. Farewell.